This is your LMAX exchange technical update for Tuesday, October 3rd, 2017. Euro dollar. The euro remains under pressure since breaking down below a head and shoulders neckline the other week, with the market now projected towards an objective at 115.55 off that head and shoulders top. Look for any rallies to now be very well capped ahead of 119, with a break below this next key support, which comes in around 116.63 to expose that 115.55 measured move extension, which also roughly coincides with the 100-day moving average. Sterling dollar. Cable is broken down as we had projected following that breakdown below 134.50 back towards that previous resistance, now turned support in the 132.50 area. Any setbacks from here continue to be viewed as corrective. Market should be limited in those weakness to the 130 area ultimately, with the broader structure now favoring the top side after the market shows signs of basing out in 2017 off that 2016 plus 30-year low. And so the market should see now a higher low over the coming days and weeks in favor of the eventual push back towards the 2017 high up in the 136s and through there towards 140 to 145 further up. Again, while the market has come back under pressure, additional setbacks are viewed as limited, with the 130 area seen as that level where the market will be ultimately supported in that area in favor of a bullish resumption. Dollar yen. Dollar yen is trading in the middle of the range. Recent gains do suggest that there is the possibility that we see additional upside up towards the 114 to 114.50 area range highs that have been defining the top of resistance over the course of 2017. And if we do see a move up towards that level, there's risk for the market to once again adhere to this range and stall out and roll over. And so if we do see an additional push higher, rally should be very well capped in adherence of the range, and that could eventually open the door for a drop all the way back down towards the range lows in the 108 area, and even a retest and break potentially of that 107.32 2017 low from the other week. Euro Swiss. Euro Swiss has been consolidating over the past several weeks. The market, however, is now in a constructive outlook bullish trend, with the market breaking out above 110 and 112 in 2017, and this sets the stage for the next major upside extension beyond the recent 2017 high at 116.24 and towards that major psychological barrier at 120 further up. Only back below the 112.60 area, or that 112 handle, would compromise the constructive outlook for Euro Swiss. Aussie dollar. So Aussie dollar has recently broken back towards and just a little bit below a key barrier at 78. If the market establishes a daily close below that level, it will open the door for additional weakness, exposing a drop all the way down towards the 75 area. Any rallies that we do see, though, in the interim should be very well capped ahead of 80, with only a close back above 80 to really put the pressure back on the top side right now. Dollar CAD. Dollar CAD has been showing signs of the onset of a material correction in 2017 after basing out by plus 2-year lows, just shy of that 120 barrier. There's room for these gains now to extend up towards some medium-term resistance at 127.80, which is that high going back to August of 2017. Kiwi dollar. So Kiwi has been chopping around, but the market is overall looking like it's topping out again after stalling above 75 in 2017 back in July. A lower top now is trying to carve out just over 74, which will be confirmed on a breakback below 71.32, that recent low that was seen in late August, below which would expose a drop back towards a measured move towards a retest of that 2017 low in the 68s. SPX 500. The S&P 500 continues with its push to fresh record highs. The market, since breaking out to fresh highs above 2,500, is now focused on a move to that next key psychological barrier at 2550. At this point, we would need to see a break back below 2487, that low from the 25th of September, to take the immediate pressure off the top side. Gold. So gold has been under pressure over the past several weeks. And the market now is looking like it could be poised for deeper setbacks, but we need to be reminded of the fact that this is a market that has seen sharp pullbacks over the past several months, only to be well supported in favor of fresh higher highs. And so look for this market now into this pullback to actually be well supported ahead of the 1250 area, or certainly around 1250, in favor of that next major upside extension beyond the current 2017 high from September at around 1357, which would expose a retest and break of the 2016 peak at 1375 further up.